A week ago on this show, we told you about the New Way Forward Act. If passed, that law would welcome dangerous, violent criminals into the United States, let them stay here even if they commit more crimes, and then, amazingly, require taxpayers to pay for criminals who've already been deported to come back to our country. You'd get to buy plane tickets for armed robbers to move here from Guatemala. It's lunatic. The bill wouldn't just remake American immigration policy, it would remake the country itself. That's the point, of course. As supporters of the bill often say, openly, America's criminal justice system is racist. If you want crimes punished and criminals kept out of your country, you are racist too. Only a truly radical party would consider a piece of legislation like that. The Democratic Party of 2020 is every bit that radical. If Democrats win this year's presidential election, some version of this insanity will almost certainly become law. But immigration isn't the only issue on which Democrats have become dangerously radical. It's now virtually every issue, including, believe it or not, banking regulation. America has about 8,000 separate banks and credit unions, and every one of them receives what's called a CAMELS rating. The rating evaluates a bank's financial health based on its assets, earnings, sensitivity to market risk, and other relevant factors. Crucially, all 6 parts of a CAMELS score are financial in nature, as you would imagine, or related to running a functioning business. Bad CAMELS scores don't just mean a bank is in danger of failing and that investors should be wary of it. No, low scores frequently trigger regulatory intervention by the federal government. They can destroy a bank. It's a big deal. Now, congressional Democrats are pushing to add a 7th factor to the CAMELS rating, a nakedly political one. A bill called the Promoting Diversity and Inclusion in Banking Act is currently working its way through the House. The bill would impose a so-called diversity mandate on banks if they want to stay in business. Now, we're not talking about diversity of assets. That might make sense. No, this is the age of wokeness. Nobody cares about math anymore. Instead, regulators would monitor banks to see that they're providing enough anti-bias training and would keep track of their hiring practices based on race. They get out the ledger and see what color everyone is. Any bank with more than $1 billion in assets would be required by law to have something called a diversity and inclusion officer reporting directly to the CEO. Now, why are Democrats doing this? To make the country better? Right. No. It's a shakedown, like everything else they do. Listen to this strikingly clear explanation from the House Financial Services Subcommittee on Diversity and Inclusion.
We need to change it, and we need to change it right away. Agreed. The excuse of we can't find any, that's what I'm hearing from some of you. That's not acceptable. When you have power, you have to use it. We have the power. Regulations may be the thing to do. I think the carrot was a good idea, but after having heard things today, I think we've got to move now to the stick. That's regulations.
When you have power, you got to use the stick. That's Congressman Al Green of Houston. At the same hearing, Green peppered witnesses with questions about whether it was time for, quote, race-conscious regulations in banking. You probably had no idea race had anything to do with banking. And most Americans, of course, had no idea that any of this was going on. But banks got the message loud and clear. Hire diversity commissars, the same kind that have done so much to destroy higher education in America, or the feds will crush you. So where are congressional Republicans while this has been going on? We'll take a guess. As is so often the case, they're playing along. At the same diversity subcommittee hearing, ranking member Ann Wagner of Missouri praised banks for their work instituting unconscious bias training. By the way, something that has never been shown to do anything other than deepen racial wounds and divide this country. Ever. Now, it's a given that all of this is stupid and wasteful and divisive. It certainly is. But it's also dangerous to the country. So we already know what happens when the government pressures financial institutions to make financial decisions based on political considerations. We've seen it recently. Starting in the early 90s and continuing through both Democrat and Republican administrations, banks face steadily rising pressure to make more risky loans to borrowers with lower income, thinner credit histories, and a much greater risk of default. Banks complied. They were afraid not to. So millions of Americans received subprime loans. Remember that? Down payments were cut or eliminated altogether. In most cases, the intentions behind this weren't bad, actually. The government wanted more people, especially people in minority groups, to own homes. Again, that's a laudable goal. Homeownership is a good thing for everyone. It gives all of us a stake in our society, something to be proud of, and by the way, a legacy to leave our children. But the way to promote home ownership is to make homes less expensive and to create an economy robust enough that people can afford to buy them. They didn't do that. They ignored reality. That doesn't work. It never works. But for years, the government demanded that banks follow the rules whether they made sense or not. And the result, as you remember, was the 2008 financial meltdown. It was the worst economic crisis in this country in 80 years, since 1929. America still has not recovered from it, nor apparently has Congress learned a thing.